Globally, we are witnessing one of the worst times in history as we look at the volatility finding its way through the markets and into the real economy. The mainstream media hides this information, but you came here for the truth, so let me unveil that for you. I will show you specifically the charts that they are hiding from us and why they are very important. Now, this is out of CNBC. October, not so scary. The Dow and the S&P close at record highs. Now, why am I coming out here and saying that things are bad when CNBC is saying everything is just fine? But let's get into it right away. They said U.S. stocks surged on Friday, lifting the Dow Industrials and the S&P 500 to record closes after the Bank of Japan unexpectedly expanded stimulus, increasing hopes for the global economy. See, no longer are they worried about global trade, about treaties and pacts and all of the very important fundamentals for a global economy. It is now just worrying about what the central bankers say and what the central bankers do. As long as they continue to print money, the people are confident. But of course, that is not the way this works. You can't just devalue and dilute the currency in order to increase the prosperity. This has never worked historically, and it's not working right now. I will show you that specifically. In the highlighted portion, it says a lot of the fears that led to the sell-off in the middle of October turned out to be unfounded, and U.S. interest rates are even lower than where we started, which makes the case even for equities even stronger. And that is unbelievable. As JP Morgan actually suggesting this. And of course, this is quite funny to me because if you see the first line, it said, they had these unfounded thoughts about why this happened. But of course, as soon as you drop out on the stimulus, the market goes down. So is it really unfounded? No, of course I don't think so. As I stated previously, I believed that the QE3 could be stopped on the surface level. Of course, it's still going on, but they could stop in the US with the Federal Reserve. They could stop QE3 as long as someone picks up the slack for them. So the ECB is ready to print. You're looking at the Bank of Japan. All other banks around the world are doing this on and off. And right now, we are seeing the Bank of Japan. And of course, that sent the markets upward. Of course, I knew it would. It doesn't take a genius to figure that one out. So then let's go into this article right here of JP Morgan as well, out of Bloomberg, talking about the largest purchase of a New York building by a Chinese buyer, showing the Asian investors' growing appetite for U.S. real estate. This is something that has been going on now for quite some time, and it is beginning to accelerate as the Chinese buyers are buying up more and more of the U.S. real estate, signaling a few things. So let's get into this. I just wanted to mention this specifically. This was a $725 million deal of JP Morgan's building there, the largest component of household wealth. In the U.S., it's financial assets. That is definitely the major component. 71.7% of that. Chinese household assets are definitely into real estate, and that is a lot of the reason why they're going in and buying up U.S. real estate big time, because they're trying to continue on with their real estate, but they want to diversify. They also want to get their money out of their own currency, hold it into another country. There are many reasons why this is happening. Just trying to show you the difference in what is happening when you have the U.S. heavily invested in this financial system, whereas the Chinese want a more solid foundation. The Chinese, the Indians, and much of Asia, they purchase real assets like high-carat jewelry and other things, real estate, and they are doing this to hold their wealth. They know that financial assets, although could be very profitable, are really not the best, especially when you put all of your eggs into one basket. A big, big mistake, and we've seen that happen before. But China is definitely not bulletproof. Look at this here out of Bloomberg. China manufacturing slows as growth pressures deepen. And everyone believes that everything in China is going up and up and up every single day, but that is not the case. They are going to face some hard times in the future. You can't avoid that. Any empire faces recessions, depressions, hard times, good times. Things like this happen. So let's go into the highlighted portion. China's manufacturing slowed further in October as a property slump and the slowdown in investment growth put the world's second largest economy on course course for the slowest full-year growth since 1990. That doesn't mean that they're going to never grow again or that they're going to enter into the depression tomorrow. It just means that everything isn't so rosy. And why is this? People think that somehow China is secluded from the rest of the world, where China is exporting to the whole world. So if the rest of the world is having trouble, if the rest of the world has to rely on their central bank to have a stock market that doesn't crash, you know that there's a problem. So of course China is feeling that, and also we have some gluts in certain areas within China, and you can see that as the manufacturing slows down, it's becoming a problem domestically as well as internationally. And going on, out of the Japan Times, Japan's pension giant to double share purchases. Now, why in the world would they need to double their share purchases if the stock market is going up? Why would they need to do this if everything in the economy is now better? They said the reasons that the crash happened were unfounded. So then it's a very strong economy right now. Isn't that right? So let's read the highlighted portion. Japan's $1.1 trillion public pension fund on Friday approved a plan to double its holding of shares. And this is quite interesting how the Japanese are actually buying up their own shares of the stocks because they need this market to continue its upward trend. Instead of allowing it to crash, to come down and find its real natural value, they are just going to pump it up. And this is happening globally. You're looking at the S&P, for example, being purchased by other central banks around the world and given incentives to do so. You know that I've covered this here before. And why would they do this if everything is fine? The fact remains is that it's not fine. Let's go into this right here. This is the chart that they are hiding from us. They are really blocking us from the truth, but I'm unveiling that. And this is the percentage of employed population of the US. Now you could see the beginning of the chart starts at about 1949 up until the present day, and it fluctuates up and down. But let's look at these two notable points here. QE starts and QE ends, and you're looking at this right here, and we're actually worse off now than we were prior to QE starting. Things are getting much, much worse, and you could see how there is barely any indication of a market being able to continue here. It's all unfounded. This is what's unfounded, because you're looking at the real factors, the real statistics. How many people are actually employed? Not the unemployment statistics that they completely skew. You're looking at the actual employed population that has been declining over these past few years. A huge, huge problem that they are hiding from us. And what about this? This is huge news. The Guardian talks about child poverty up in more than half of the developed world since 2008. We always think of outside of the Western world. We always think of those developing nations. They have poverty, poor people. And since 2008, since this financial crisis, the people in the Western developed nations are doing worse than they were previously. Now, why, if they've been printing all this money, if the stocks have hit record highs, why in the world is this the case? The fact remains is that the policies that they've employed are making them worse. UNICEF report finds the number of children entering poverty during the global recession is 2.6 million greater than the number lifted out of it. This is big news, because this is real. This is poverty that is affecting us, and we're unable to do anything about it because the central banks are printing and printing our money, and that is supposed to be our wealth. But of course, that is the biggest detriment to us. In my book, I talked about this chart here, and this is an illustration showing you how this works. The U.S. sells its debt to the Fed, and the Fed gives it that money. The U.S. gives it the bonds. I call them IOUs, and the Fed is left with this pile of IOUs. It's just sitting there, and to be purchased at a later date by some sorry sucker. And who will undoubtedly buy this? We're not sure, but the Federal Reserve is left with that on its balance sheet to sit there and devalue the currency. This chart shows how the Federal Reserve is responsible for almost all of the net worth increase prior to the recession. This is going to show you that printing the money is finding its way into the wrong hand. The individuals are more and more poor, yet you're looking at the Federal Reserve having this fictional way of supporting the economy, at least in the statistics, and this is fooling the markets, it's fooling the individuals, sadly, who even are in poverty, believing that their government is doing the right thing, that they are performing the right actions, but it is quite the opposite. If you found this video informative, please give me a thumbs up. Don't forget to subscribe to the videos. We are over 8,000 subscribers right now. We have over 600 videos at the Money GPS right here, and once again, I'm still working on the website, so bear with me for the time being, and don't forget to become an insider. The Insiders is where I give it all my best intel for free, and that is available at themoneygps.com. Scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.